want to get two quick predictions from each of you, starting with Bob. 5 years from now, is there a euro? And in what month does the Fed change its policy? Is it is it March 2012, September 2013, or do we go all the way into 2014?
The euro lasts because it has to, I think. And the Fed doesn't change until after the election.
What, so in 2012?
Yeah.
Wow.
Yeah.
Bill?
I'll go with Bob on the euro. Too interconnected, too difficult to unwind. So I think the euro persists. The toothpaste is out of the tube. We've got a euro. In terms of Fed policy, the Fed has guided the first rate hike generally to the end of 2014. I'm more interested in the risk of who is the Fed chairman. Bernanke's term is up at the end of January of 2014. I think if Obama's president, it's likely to be Janet Yellen. So I think she has been a strident dove.
The former San Francisco governor.
Yeah, exactly. So I think that I think therefore I'll stick with the Fed guidance. I think the first rate hike is end of 14.
End of 14.
Don't fight the Fed is something I've learned over the years.
Lee?
My father always told me, like, don't fight the Fed. So, it's like I just do what I'm told. Well, the euro is going to be around. I don't want to get in the weeds on this, but in 10 seconds or less, the euro was designed as a political movement, to try to not create another world war inside that continent, not as a fiscal union. So I think people have to understand that the reason why the euro was created was not a financial reason. It was to help cure 3 wars, the Franco-Prussian War of 1870, World War I, World War II, and then they start designing this thing after the wall fell. People remember there was a Cold War, sort of the Fourth War, and then after that war stopped, they thought, well, maybe if we all use a currency, we're less likely to do bad things to each other. So it's not going to go anywhere. I just don't know who's going to be in it at the time. I have no idea when the Fed's going to do something. I do know that when I like to look at nominal GDP. GDP is a little line on trend, maybe like 4.5% nominal GDP. I'll use regular GDP because I always get in trouble on TV because people yell at me because I say 4.5. They're like, that's crazy. But let's say the trend is 2.5% GDP. We're going to have to get above trend, like 3, maybe 3. I don't think we can make 3.5, but 3.5 above trend GDP for the Fed to do these little steps. And you know all about the steps. Mm-hmm. I just get lectured on what the steps are, but there are these steps the Fed does. It's very it's even more transparent now. They don't do this stuff overnight. And you're the expert. I mean, you've seen that for 30 years, how they do these steps. So, but what I'm really looking for, as opposed to what the Fed is actually doing, I'm looking for that trend GDP to go up to 3.5. And man, I mean, maybe we see it at the end of this year a little bit, but we're going to have that sustained. And I don't see how we're going to have sustained above trend GDP. I mean, it's going to take a couple of years.
So you're into 2014.
Yeah, I'm with you. I would say end of 14.
Okay, well, I'm going to go against all of you. I'd say there will be no euro as we know it now in 5 years because exactly what you said, because it was designed for all the wrong reasons, not to keep people safe and protect everybody from Germany, but because it was designed for political and not financial reasons. And Bernanke is going to start raising rates before he leaves office, June 2013.
Want to put like $1,000 on that?